trader and educator at Traders Agency. Thank you so much for joining me this morning.
Hey, Remi, thanks for having me.
So first and foremost, what do you think is behind the stock market rally, especially considering some of the recent economic data as well as slowing growth?
Well, a lot of people make the mistake of confusing the economy and the stock market. As you know, they're two very different things. If you wait to buy stocks until the economy's showing great health, you're going to be really late to the party. The lows that come 2009, 2020, mid 2022 come when the news looks the best. So the stock market, being the discounting mechanism it is pricing in future expectations. So what we look for in a really healthy market is when stocks can go up, as you said, even on poor economic news. So we've got poor GDP numbers that came out recently. Inflation is being stubborn. The rate cuts we were promised aren't coming. Yet the S&P and the NASDAQ are printing new highs. So the reason is simply optimism from investors looking out to the future and expectation of improvements going forward. And so I don't think people should overthink it. They should just be owning stocks and enjoying this rally.
Well, Ross, I think that's a key distinction there, and I'm glad you mentioned that. This week, there's been a lot of focus on artificial intelligence ahead of NVIDIA's earnings, and also focus on retailers as we get earnings from some big box retailers. But I do want to take a deeper dive into the shipping as well as uranium sectors. So if you could give us a little bit of insight into what factors are driving the recent performance and why you think we're seeing this strong surge.
Yeah, well, so AI was a big theme of the market. The 2022 or late 2022, 2023, as we know, the big performing stocks have all been in that space. That's the hot area of the market right now. Why shipping is outperforming so well recently, I don't know. There's not really a clean reason for it. We are, however, as you mentioned, seeing a lot of strength in the nuclear and uranium areas. This is something I think is flying under the radar for a lot of investors, but you don't want to overlook this. See, as you mentioned, AI is so hot. Everybody's watching C3.ai. That stock's up big on the deal with Apple, as you talked about earlier. NVIDIA's got earnings Wednesday, but I think buying NVIDIA here is like buying, real estate in 2007. I mean, this stock is up 500, 800%. It's worth a couple $1 trillion. You're not going to make 3-4x your money there. The nuclear space, in my opinion, is sort of a backdoor play on AI. And one thing I haven't seen a lot of people talking about is the energy consumption there, right? The bottleneck for AI right now is not chips. It's not compute power. It is literal power, energy. And so, these big data center farms, they can't suck half the power supply from the county. At some point, they're going to have to come up with a way to make their own power. And nuclear just makes a lot of sense there. It's clean energy. From everything we've read, it's not near as scary as Hollywood has had us believe the last 10, 15 years. We already saw Amazon back in March buy a nuclear-powered data center for AWS. Google, Microsoft also showing interest. And with those big tech giants, they're going to follow the same playbook they always have. Instead of starting from zero and building this stuff up, they just gobble up a competitor. They want to get into nuclear. Fine, they got a $50 billion war chest. Go buy some nuclear companies and set up plants. So we're seeing stocks like Cameco, CCJ. We're seeing stocks like Denison Mines, DEN. Great uptrends coming out of nice, clean bases. I think these are going to be some of the best performers this year. And again, it's just sort of a pick and shovel play on the AI wave we're seeing.
And Ross, you mentioned some key names there, and of course, we're going to keep an eye on what happens in terms of big data as well as tech this week, as well as moving forward. But what other sectors are you also paying attention to as we move forward into the rest of 2024?
Well, as you said, shipping, looks really strong. We don't really know why. We look over the last 1 month, last 2 months, last 3 months. It is the leading group in the market, number one out of all 40 subsectors we track by far. Obviously, the AI space can continue to be hot, but I think it's really hit or miss there. As I said, you really missed a lot of that party with the NVIDIA, with Supermicro, some of those. Some of the smaller AI companies are likely to get gobbled up as targets, but main things we're watching: shipping, obviously very strong, nuclear, uranium, and the gold market, very, very hot. We've got gold Gold's been essentially consolidating for the last 13 years. I mean, it put that high in back in whenever it was, 2011, I believe. Finally breaking above 2,000 an ounce, and it's ripped to 2,400. Now, is gold going to go up 600% in a year like NVIDIA? No, I'd find that hard to believe. But some of these small gold mining stocks would. And if you look at the junior miners, GDX, the ETF that tracks those, there's a big lag there, big discrepancy. Some would call it an arbitrage play where we've got gold up here making new highs, and in fact 20% above past highs. Meanwhile, a lot of these gold mining stocks are 20 to 30% below their highs. So those could easily play catch up. And as you know, when the price of gold makes a big run, you usually see a multiple of that in those mining stocks, because a 20% increase in the price of gold is a 100% increase in miners' profits. So gold, shipping, the nuclear uranium space, I think those are the really hot areas of the market right now.
Well, Ross, we will have to keep an eye on how all of these sectors do play out this year. So thank you so much for joining me, Ross, and thank you for all of your insights.
Hey, my pleasure. Thanks, Remi.